Hello, traders. Welcome to Price Plan Profit. It's Melissa. The bell has rang, and now it is time for me to do my daily trade recap. This one might be a little longer than yesterday's because I had more trades. I was not teaching this morning, Trendy John was, so that left me available to do some more trading. So first off, I want to start with SPX, and I technically had three trades on SPX, but one of them was a trade I did for Trendy John. So I'm not going to cover that one, but I'll explain it real quick. I just don't have it jotted down on my chart. All right. The first trade I took was from the PMZ, or the pre-market zone, my absolute go-to day trading indicator. When price crossed above the PMZ, I was going long here. The market was very bullish. We got a pullback after opening up above the PMZ. We got a pullback into the PMZ, and I was going long because I was good with the risk of 5 points. Long it was. Look, I exited. I bought it at $10.50. I exited at 15. I only bought one contract because I like to keep my allocation around $1,000. Could not buy two contracts here. That's okay. I'll take the $450 quick profit in less than 5 minutes. Not a big deal there. Then up next, I was waiting for the market to pull back to the bull channel all through this move. All the way up to the new all-time high, there was no pullbacks to the bull channel. So I did not get another entry into SPX to the upside. We came up here. This at the time was a new all-time high. I noticed that we sold off from that level back into the EMA cloud. I drew a horizontal line there, and my plan was to short a double top. Now, understand, we were in a bullish market. We have been in a bullish market. Today was a very strong trending day, no pullbacks to the bull channel. So my thought up here was, hey, I am not bearish this market, but at a double top, I'm looking to play this back down to the 236. So if I run some Fibonacci levels here from yesterday's close to that new all-time high, that was going to be my target, was 65.74. I bought the 65.75 puts. All right. Well, as you can see, we never got the pullback to the 236. And so I trimmed at the EMA cloud because I'm not looking for a home run here. I am trading in a bullish market and I am buying puts. That is not something I want to hold on to for a home run. So I bought two contracts up here at $3.40 as price came up, made a double top. The next 5-minute candle was giving me a trendy sell signal, or an indication of momentum back to the downside. So I went ahead and went short here at about 65.86. And my first target was this cloud about 3.5 to 4 points below for a quick $130. Then I had a Q&A session in the Trendy Trading Room, and I could see that the market was falling, and rather than worrying about managing this position because it was straight up puts, in a bullish market, I quickly exited and I got my fill at $5 for another $160 worth of profit there. Now, it's not written on my chart, but Trendy John put on a butterfly trade, I believe, targeting 65.95 by 6600 and 605s. He put that on in the trendy room, or sorry, the SPX room, and I was like, hey, I like that idea. on a break above this previous double, triple, quadruple top. So when this candle broke above here about 3:30 Eastern time, I don't trade spreads. So I bought the 65.95 calls right here for 60 cents. So I was risking $60 of my profits that I had already made. I was fine if it went to zero. But rather than going to zero, it went from 60 cents and I covered it right here for 40 or sorry, $1.40, a quick $80 there on Trendy John's idea. So thank you, Trendy John, for that quick trade to the upside. And understand this was a breakout trade. So, whenever you have a top that has been acting as a resistance, been tested many times, we're looking for a break above, then you can get some momentum to the upside. And if you're quick and don't hesitate on your execution, you can make some quick money. And that's what I did on that trade. Up next, I'm going to talk about the losing trade I had today on AMD. This was a PMZ trade. And I want to explain why this was not why it was a loser. I'm perfectly happy with the trade, but I did not necessarily take a conservative approach on this trade. I actually traded it more aggressively than I typically would. Why? Because the semiconductor sector was very strong. AMD was this ticker that I chose to trade from the semiconductor sector. The NASDAQ was very strong. And so we opened up the day right here. We gapped up above the PMZ. And I put an automatic bid in back at the top of the PMZ rather than waiting for this 5-minute candle here to close, which had I waited and not had that auto bid in, I wouldn't have gotten long at the PMZ. But I'm okay with that. I was aggressive on this and everything followed a reason to be aggressive. The trade just didn't work. So what I did is I set my stop down here at 156.75 area. I went long in the PMZ, set my stop down here. I commit to candle closes. This 5-minute candle closed below my stop. I exited. I lost $75 per contract, or about $75 per contract there. I had 2 contracts, so it was about $150 loss for me. No harm, no foul. I would take the trade again because not every trade is going to be a winner, and I'm okay with that. Up next, I talk about the Apple trade that I had today. I also took this trade from the PMZ. I didn't know if this would be a swing trade or a day trade. And why I didn't know is because I had a buy zone. This is a 4-hour zone below the PMZ. So I knew going into it that if I got a break above the PMZ, I wanted to go in with a starter position, half allocation here, and then save the other half of my allocation to add to it in this zone. Had that happened, right? I didn't get long until right here. But had we broken back down and I added to full allocation inside of this zone, I would have treated this as a swing trade. But that didn't happen. Once Apple got above the PMZ here at 9:35 a.m. or 9:30, somewhere between 9:35 and 9:40 a.m., it was a PMZ trade. I didn't know that, but price never came back down into the zone for me to add to full allocation, making it a swing trade. So I traded it as a day trade and I exited at the 230 level because we had some Fibonacci's from the high, recent high down to the recent low. And price pushed into the bearish channel that between the 236 and the 382. It was a day trade. Price was at resistance. I exited the trade for an easy win right here. And I can always look for a swing trade if we pull back into the zone again. So that was my winner on Apple. Up next is Masco. I've talked about this trade all week because this trade was started this week. I did not get to full allocation in the trade, so I exited at my first target. We have a lot of resistance right in here. An inside candle followed by a breakdown candle. I have trendy edges all in here. And I had only gotten one contract for an entry, so I went ahead and exited that contract at resistance for a quick win. I think I was in the trade a total of 1, 2, and 3 days. Up next is Delta Airlines. It was really funny to me because Delta was doing so well pre-market, but then it didn't do so well after the open, and I was expecting to take profits up here on Delta and really didn't even have Masco in my sights, believe it or not. But luckily, I already had my bid in to sell Masco at my first target, so it filled on its own. But I wasn't really watching it to see. But Delta, on the other hand, came very close to where I was going to trim out of the position, and then it had this big, huge drop. So I was trading it off a daily chart, but I want to show you on the 4-hour chart. Okay, you see how close it came to my target, like literally 20 cents away from my target. That's what I was expecting to do with Delta. I had no idea that we were going to get such a sell off where it would actually not fill my bid up here, but fill my bid down here where I had plans to add to full allocation. It all worked out though because those bids that to go to full allocation were filled. Then I ran Fibonacci's on this big imbalance candle to the downside. And the two contracts that I added, right, as planned in this zone, I trimmed one at the top of the bear channel. I trimmed the other one in the bearish golden pocket. And now I am left with one contract, and I have a hard break even stop set right here for $3.25, which would be break even for me on this remaining contract. So no matter what happens with Delta, I am going to either be stopped out at break even on the remaining third of the position, or we're going to come up here to this target area. One of those two things is going to happen, and either way, this will be a green trade for me, so I am happy with that. Then last but not least, for what I did today, I started a new swing trade on UEC. This is a play on uranium. Now, I am trading this based off of a 4-hour zone, but I am using a daily chart. As you can see with UEC, there is nothing bearish about this chart at all. All right, it is very, 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 very bullish. Okay. So I didn't have a zone. I had no desire to wait for UEC to fall back to the $11 mark down here. So I wanted to get an entry. I went to a 4-hour chart looking for the imbalance candle and found that down here in this zone. because I know on the daily chart there is more room to the downside down here around $11.50 or even all the way down to 10.86. For that reason, right, I decided to just go with a starter position. This is half allocation here with plans to add to the position somewhere between 1177 and 1161. Stop would be a daily candle close below 1144. You can already see where my trims are at, $12.70 and $13.11. If I am trimmed at these two areas, I will run Fibonacci extensions to stay in or have targets for the remainder of my position. All right. So that's what I did today. Had 3 trades on SPX, a loss on AMD, a win on Apple, Masco, and Delta, and a new trade in on UEC. I hope you all had a great trading day today. And tomorrow is Friday, so the last trading day of the week. I look forward to seeing you again in the next video. Have an awesome evening.